Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. It's that time again. We've got more questions and more answers coming up. We've got a couple of really interesting ones this week. So we're not going to leave you waiting long till you can hear those, but it is worth, first of all, giving you a quick reminder of how to send in your own wonderful question.
Yes, you can go to our lovely shiny website, propertyhub.net/ask, and leave a message there. Or you can call this very special number, which will then mean that in the office, a big red phone will light up and no one will answer and it'll get sent to a voicemail. But that's all you need to do. You call 013-808-00035 and you will get to that very special voicemail. First up, we have Derek.
Hello, Rob. My name's Derek. Thanks for the content as always. It's always really good to be keeping up to date with all the stuff that you're talking about, and it's definitely inspired me to invest in property more so than I had thought about doing before. My question is, I'm a builder and I've always bought properties, done them up, lived whilst I live in them, then sold them on. And as such, I've built up some equity within my existing property. So now I'm looking to get my first buy-to-let, and the plan would be to release the equity from my house and buy a couple of other houses as buy-to-lets. The question is, how much should I take out of my existing property that I live in? Because, of course, borrowing increases my mortgage payments, which means I obviously have to earn more a month to pay that off. But also, I don't know whether it's a cleverer idea to borrow half or all of it or what. That's why I was wanting some advice on quantities, really, on what you would take out of the equity in your property. That would be great. Thank you very much.
Derek, thank you for your question. You're far more talented than me. I could not do what you've done. And it's great that you've got yourself in a position through your hard work that you've got that equity to have this decision, to make this choice. The answer isn't straightforward because it will depend. It will depend on you. It will depend on your goals, and it will depend on your tolerance to risk. So when it comes to you, what stage of life are you in? How much equity do you actually have? So if this is taking out all the equity that you have and you're close to retirement, then you may feel that you should apply more caution than somebody who's maybe in their 30s or 40s, has plenty of mortgage payments to go in their lifetime, and also might be willing to take on a little bit more risk. Because there is always risk with any investment, and that is worth saying, including property investment. And with refurbs, even with your skills as a builder, the risk does increase. However, that's not to say don't do it. An initial assessment you should make is, if you take out that money, you look at the cost of borrowing and you say, okay, it's going to cost me X amount for the 1 year that I take this money out. Because let's say the project will take you 1 year from start to finish. Once you've worked out that number, you can then look at the opportunities out there and say, okay, if I invest this money, what return can I expect? And with that property, it might be another flip that you sell on, or it might be that you do it up, release the equity out, and then go again. What you do with that property is up to you, and I'm sure you've got some ideas already. But the financial calculation on should you do it or should you not is, will you make significantly more? Because remember, you're going to have to put a lot of work and effort into doing this. Will you make significantly more than the money that you invest in? So when you invest that money, you invest your time, your expertise, how much will you get out of it at the end? If there's significant uplift on the amount of money that you've invested, well then financially at least, you're in a better position to make that decision and look at it more favorably. Of course, it will come down to you as a person, how you feel about risk, your position in life, etc., etc. But financially, you'll be able to make a black and white decision on, is this a good thing or not? And then the emotion side, well, that's up to you. But hopefully, Derek, that gives you some idea of how to approach this. And whatever you decide, I wish you the best of luck.
Okay, let's move on now to our next question. This one comes in from Joe.
Hi guys, Joe here from London. I just want to say I really like your podcast. Extremely helpful as a new buy-to-let investor. Question I've got is I've got the opportunity to purchase a bungalow. It's got a really good yield of 8.44% because there's currently a tenant in situ. I'm just worried about the capital growth though, because bungalows obviously have a bit of a niche market. So I'm not sure how much money it's going to make in the long run. It'd be great to get your thoughts. Thank you.
All I can give you here is an opinion, because Obviously, I don't know what's going to happen. Because as a general rule, properties that are unique tend to do better because clearly buyers who want whatever that is have got fewer options. So I'd expect capital growth prospects for a bungalow, if it's in an area where there aren't that many, to actually be pretty good. Now, the flip side of that is it's probably not going to be a bungalow located slap bang in the middle of a city centre. And it tends to be the case that capital growth starts in city centres and ripples out from there. So you may not get the same type of capital growth that you would do if you picked a high-end flat in the perfect location in a city that was primed to do really well, for example. But bungalows still do have plenty going for them. To make a massive and maybe slightly unfair generalisation, bungalows tend to be favoured by older people, and the population is ageing. Therefore, there's likely to be increased interest in bungalows, and you tend not to get many of them being built because it's easier to make more money when you can build upwards. So impossible to know for sure, but those are a few factors to be thinking about. And personally, with a yield like that, I'd certainly be tempted. So good luck.
So thank you for your questions and thank you for listening. We'll be back on Thursday with the Property Podcast and of course back next week with Ask Rob and Rob. So until then, take care, have fun, bye-bye.
Bye-bye.